All right, let's talk to Mr. Bismarck Rewane, now MD, CEO of Financial Derivatives Company. Good morning, Mr. Rewane. Great to have you.
Good morning, and thanks for having me this morning.
Fantastic. So it's as expected. I guess no surprises here. 25 basis points cut. What does this signal, in your view, for the U.S. economy and, talks about the U.S. Fed independence? What's your take on that?
I think the question of Fed independence has been pretty much put aside. We had 12 members in attendance yesterday. 11 of them voted for a 25 basis point cut, and Miran, who is on leave as the chairman of the Council of Economic Advisors, voted for a 50 basis point cut. So there's kind of unanimity. What was also interesting is that the risks that were considered to be elevated were more in the part of employment and jobless claims rather than on inflation, even though inflation is at 2.9, which is a touch higher than what it was in the previous month. Also, the guidance is that there will be 2 more cuts this year, and probably that is 25 plus 25. So in all, we'll have 75 basis points cut this year. What is the effect of that? The market had already priced in a 25 basis point cut, and to a large extent, they expected 50 maybe as a surprise. What it means is that now, because that was priced in and the dollar actually appreciated. Normally, when you bring down interest rates, the currency gets weaker, but the dollar actually appreciated against the basket of currencies, generally speaking. We've seen the price of oil, as you just pointed out, actually decline a little bit, and we've seen other commodity prices, global commodity prices actually increase. So there was no surprise, no problems. All we saw was that the disruption expected because of Miss Lisa Cook, or Professor Lisa Cook, being asked not to participate, but she then participated because the courts have allowed her to participate and to continue for a long time. So as far as the Fed is concerned, and the independence and autonomy of the Federal Reserve Bank is pretty much intact, and we expect no surprises between now and the end of the year. For us, the price of oil at $67 is good. I think our production, that Nigeria's production, is slightly lower, but almost close to the quota levels, the OPEC quota levels. And all things being equal, we expect no major shocks as a result of this Federal Reserve meeting and the outcome. No surprises, no shocks, and therefore stability in the global markets for now.
How do you think, U.S. businesses and households, are likely to feel the impact? How do you think they'll feel the impact of this rate cut in the short term?
No, what has happened is that you heard the Federal Reserve saying that consumer spending had declined, and also the level of investment. So there are 3 major risks that are being evaluated by markets. One is the problem of tariffs and counter tariffs. That is one item. The second one is the question of consumer spending and elevated level of activities which could lead to higher inflation. And the third being the fact that unemployment numbers. So if you look at it, as far as the Fed is concerned, the most potent risk right now is unemployment, because if unemployment or if the jobs market is not solid, then consumption reduces, and if consumption reduces, then you'll have investment reduce. So basically that's it. But having said that, we've seen the stock market in the US actually rally to record levels, because most of the risks that were discussed earlier on were probably exaggerated. So once the market knows, like you said, you buy on the rumor and sell on the news, the market already knew and prices in, and therefore we do not expect any significant changes. All we expect to see between now and the end of the year is slightly lower oil prices. This will also mean mortgage. You see, the most important thing for the U.S. consumers is that because of interest rates have come down by 25 bips, we will see their mortgage costs will go down. And if the mortgage cost goes down in the U.S., it means that consumers will have more to spend on consumer goods. And we are going to that last quarter of the year where Christmas spending and all the holiday spending comes on. We have Thanksgiving. First of all, we have Halloween, Thanksgiving, and then Christmas. So these are three very important months as far as the US economy is concerned. And also, to all intents and purposes, the global economy will also respond to that.
So, Mr. Ronnie, so we have the first cut now this year. We have gold still trading near all-time highs. We have a forecast from Deutsche Bank that gold will hit $4,000. We're seeing what's playing out with the US dollar. You know, so far the stock market is still rising. Is this a perfect storm for something that we don't know yet and retail should actually be paying attention to, retail investors?
I do not think so. I think that the what I call the shock absorbers in the system are pretty much institutionalized. We do not expect any major surprises. Therefore, all the surprises that were anticipated are pretty much exaggerated, and I think we should be looking at stability. Now, having said that, it's important to know that gold is trading at about $3,400. The target that it will go to $4,000 an ounce is, according to Deutsche Bank, I do not believe that that's going to happen. That would mean that there's a significant, maybe a 20% drop in the value of the dollar, which will make the price of gold to increase. So we don't expect that to happen. What is more likely to happen, therefore, is that if there's some kind of settlement, some type of structural settlement in Ukraine, which brings down the price of oil somewhat, maybe to about, let's say, $60 or $62, then it begins to have a direct impact on what we in Nigeria and emerging markets begin to have to deal with. But at $62, $63 a barrel, if that happens, now let's bring it home to Nigeria. It means that, one, the price of refined petroleum products will decline, but also our revenue decline. You just mentioned now that we had 2.2 trillion naira shared among all tiers of government for the August revenue allocation. With a drop of maybe 2, 3, 4% in the price of oil and production remaining at about 1.7 million barrels, we will see a major hit to our revenue, which means that the federal government of Nigeria and the state governments will have to borrow more to fund the budget. If they borrow more, then you will find that we expect the Central Bank of Nigeria at a meeting next week to follow suit with the Federal Reserve and other banks. We just had Ghana cut by more than expected yesterday. So we expect that to happen, and therefore the cost of borrowing of the federal and state governments will come down marginally. And that will be an interesting element for fiscal deficit management in Nigeria. So that's why I said, yes, the Fed in the US, the global markets are one thing, but the interconnectedness between global markets and Nigerian policy and market activity has never been more integrated than now.
All right, I'm talking about interconnectivity at this point. Next week, the MPC will also be making the decision. Does this decision make it easier for other central banks, this latest cut from the US?
Yes, it is, because it was well anticipated. Some people thought that it would go by 50 basis points, but now it's 25. And they've given guidance for what's going to happen between now and the end of the year. So pretty much the price of oil, the value of the dollar and all of that is going to be in a horizontal trading range. When you see that, you look at Nigerian inflation has come down to 20.12, while US inflation has increased. At the same time, US interest rates have come down by 25 bips. Let us assume, for the sake of argument, that Nigeria brings down its rates by 25 bips from 27.5 to 27.25. You will see that the interest rate inflation differential is in favor of Nigeria. Therefore, two things will happen. One, the Naira will not weaken in the foreign exchange market because of a reduction in interest rates. Probably copy what has happened in the US. That is, you bring down interest rates by 25 bips and the Naira strengthens. Two is that the cost of borrowing by the government, right, the cost of debt service will come down, and then Nigeria will be able to actually probably raise additional money. As you may know, the South African government is retired $2 billion of bonds and is going to the market to tap that again to raise their borrowing. So they used $2 billion of their reserves to pay off their debt and are raising another $2 billion to replenish that. So if that is happening to South Africa, which is not an oil-producing country, Nigeria has the benefits of this. And then we now pivot back into what's going to happen domestically. A couple of things, the Dangote refinery and the trucks are on the road. I think that's pretty much resolved. So we are going to have uniform pricing of petroleum products across the country. We are going to have free distribution of petroleum products with the CNG trucks, thousands of them put in by the Dangote refinery and the petrochemical complex. And also, we are going to be seeing massive exports of fertilizers from the Dangote refinery, which is a game changer. So when you take that on one hand, and you take the investment Nigeria is trying to make on power supply refinancing, both at the GenCos level and also at the DISCO level, we might begin to see some kind of equilibrium in the power supply situation. Therefore, if we see generation capacity increase somewhat, that could portend well for growth numbers in 2026. But for now, everything remains stable as far as Nigeria is concerned to the end of the year.
Fantastic. And I'm wondering if this adds to the positivity for the dirty December we're expecting, somewhat.
No, the December is going to be quite interesting this year. Like we said, it's December to a power of 3. Dirty December.
Right.
So we expect that. But also, if you look at domestic commodity prices, which is interesting, we carried out a market survey yesterday and we found out most of the products, most of the commodities we saw are actually staying flat and others declining. The most interesting, the one that dropped sharply is Gari that came down to 25,000 naira. And that's interesting. Tomatoes also dropped by 7% to 70,000 naira. And yam tubers also dropped by 25% to 9,000, because this is the time for the yam festivals. And rice stayed flat at 80,000 naira. So this is end of September. We're going into October. We think that harvest is kind of shortly, but we will also see that if you look at the inflation numbers that came out, key areas where inflation actually declined the most were Oyo and Ekiti states, as well as Kano State. Now, why are those states facing this kind of inflation trend? It's because most of those guys were shifted from domestic commodities and planting cocoa. And cocoa, the price of cocoa is now at $7,200 a ton, which means that the guys in those areas are actually making more money, and that is making the demand for commodities in that area and inflation generally higher. So that's an interesting development. But generally speaking, we expect inflation to taper downwards next month again, and then we'll see how it goes. But generally speaking, the inflation trajectory shows some moderation, just like the rest of Africa, and most of the issues that the inflation stoking factors are actually easing at this point. We've seen money supply growth taper. Right. We've seen also the exchange rate appreciating. So I think that covers what the expectations are for the next month or so.
Fantastic. All right, Mr. Rewane, thank you so much. That's a good place to anchor it. Mr. Bismarck Rewane, CEO, Managing Director, Financial Derivatives Company. Thank you so much for coming on the show, sir.
Thank you for having me.